The latest real estate statistics from the Fraser Valley Real Estate Board are absolutely shocking. The market is obviously down a lot. And because I'm a real estate agent, everybody accuses me of pumping the market no matter what the market's doing. So I thought today it would be a little bit of fun to actually go through the latest Fraser Valley statistics package and try and not put any real spin on it one way or another. All I want to do is present to you the information, and well, there are some shocking trends there that I think could be a real problem moving forward for a lot of people that are trying to sell their homes. And there are also some positives. So as we go here today, please go ahead and leave me comments down below to let me know what you think of the information that I'm presenting. And of course, if you would like to stay up to date on my market here in Surrey or the entire Fraser Valley, please go ahead and subscribe to the channel. It means a lot. We are on a race to 10,000 subscribers, and well, I'm hoping I can get there by summer. And if you are a real estate enthusiast, you know, the type that likes to invest and grow their wealth, or maybe you're the type that likes to go down in the comments and say, inevitably, there's going to be another 30% drop. No matter what side of the equation you're on, if you could click the like button, that would help me get this information out to more people, and then they can make a decision for themselves, whether or not they would like to get into the real estate market and invest, or who knows, maybe buy gold and silver instead. So now onto the video and just looking at some of the numbers. And I'm going to show you something that actually is scaring me a little bit. And that has to do with every single day when I log into my system. I'm going to show you what it looks like here. The real estate agents in the Fraser Valley in Vancouver use a system called Paragon. And every single day when we log in, it looks something like this. We get what we call a message of the day that pops right up. So this shows you this is 9 of 21 working days of the month of January. So this is being recorded on the 16th of January. There are currently at this point 711 new listings this month to the market. In December, that was a much smaller number at 484. In January of last year, we were actually a little bit higher. Remember, stuff was flying off the shelves at that point in time, but we were a little bit higher at 764. But this is the part that immediately kind of scares me as an agent. It's just the inactivity out there. So there's not really a lot of listings coming to the market, which is fair and very much an accurate statement. However, look at the tiny amount of sales. There have only been 200 sales so far this month in the entire Fraser Valley. Just in December, which is generally a very slow month, we had 353 by this time in the month, by 9 working days in. And then last year, when there was absolutely no inventory, half of this year, there was still well more than double the sales at 475. So to me, that is a leading indicator. This is going to show you where the market is going. And that is just the fact that money is so expensive that people cannot afford to get into homes. And then obviously with money being so expensive, you have the speculators who have all backed out of the market. So this type of market is one for people that have a need to either buy and sell, and all the people that, you know, are fine where they are and they can wait a while, great, they're waiting. And all the people that were trying to flip properties or make a quick buck, they're also out of the market. I want to move on here and show you this next package I'm going to show you is totally available, and you can review these numbers for yourself. This website is strictly the Fraser Valley Real Estate Board, so it's FVREB.bc.ca/stats, and you can look at this information for yourself, and these go back all the way into 2010. I'm going to show you the latest stats package here, which was the release just this month. It was for December. Obviously, stats are always 30 days back, and I'm just going to show you some things that I found extremely interesting when I was flicking through. So first off, there's always the press release. Let me scroll down a little bit, and I like to get straight to the numbers. And this is the section that I always check out first. The overall grand totals for the marketplace. So as you saw probably in the Surrey report, if you watch this channel, we did have 716 sales. Now, a year ago, that number was 1,808. So the number of sales, not prices, the number of sales are down 60%. But that being said, this was like the most insane December we had ever seen previously. was last year. And then when we look at it from a month-to-month basis, the number of sales was obviously down. December is always lower than November. Not always, but usually lower than November. The amount of new listings that came to the market was way down year over year as well, and month over month. The active listings. So this is an interesting number and one I try and keep an eye on. The active listings at the end of December were 3923, which was actually way up, thank goodness, from the year. And that's what caused a lot of people don't like to focus on this, but the insanity that we had last year was a ridiculously low amount of listings. And when that clicked over to January 1 of 2022, that number was at like 13 or 1400 listings. It was insanely low, and that was causing prices to spike because just in November of this last year, we were at 5,300. So you've seen we've gone from 5,300 down to 3,900. And if I look right now, I think I checked yesterday, that was like 34 to 3,500 listings. So really, really short supply. And if we want to be in a healthy market, this number needs to be well above 5,000, hopefully even 6,500 listings on the market at any given time. But here is the shocker, the average price. Let me see if I can zoom in a little more for you. The average price across all asset classes in every single city within the Fraser Valley is now $900,000. A year ago, it was almost 1.15, representing over a 21% drop in average price. From last month, however, it seems to be actually stabilizing. Sure, we're down $3,000, but hey, that's a very small amount on a $900,000 purchase. So that's the overall market with no specific sector being looked at. Let me know again down below in the comments what you think of that. The next thing I want to do is I'm going to hop into the year sales. So the whole year, how many new listings came to the market, and then the whole year, how many sales actually happened. In 2022, that number was 15,000. That is very low. That number should be, hopefully in a good year, 22,000. But if we look back to this time last year, that number was, well, almost 28,000 sales, and that is extremely overheated. There's no denying that. And now we're seeing that 2022 as an overall had 44% less sales than the previous year. But they also had less listings by at least a few thousand, which would lead me to believe that hopefully at this point in time, we would see inventory rise and that the market would stabilize. However, again, that doesn't appear to be happening. Now, let me zoom back out because you can look through your city. There's the total combined area. Now they break it down into detached townhouses and apartments. Most people would like to focus, however, on these reports specifically in detached, and that's what I'm going to do here today. And these are where the shocking numbers are going to start coming out in the news, so be ready for that. In some areas, you're going to start seeing minus 40% year over year. So, for instance, benchmark price. Now, highly debated here on the channel, people in the comments all the time. Is it benchmark price or is it average price? As a real estate agent, I'm telling you, yes, benchmark price does lag slightly. It is a lagging indicator. However, average price is just a calculation and it does not account for anything else like type of home that was sold. So these are the two things that you have to look at, because a lot of people say the only thing that matters is average price. So if average price is down, the market is crashing. Great. Yes, I understand that. However, if average price is then up, the market must be recovering if you're going to stay within your own argument. And it's going to be very interesting here to see the difference between benchmark price and average price in so many different areas. And I'm going to pop down because one of the most interesting right off the bat is Abbotsford. Abbotsford benchmark price is down 20%. Month over month, however, it's down 3.5%. But if you look at the average price, this is the number people are going to focus on. Average price year over year went from 1.366 to 966, representing almost a 30% decrease. And since last month, a 14% decrease. But when you actually look at the marketplace and you're looking at transactions, deals over top of deals, you're not seeing a 14% fall off month over month, and a 3.5% fall off is much more realistic. None of these numbers are great if you bought at the peak. However, at the exact same time, you do have to understand that the majority of people did not buy at the peak. So most of the people don't have mortgages tied to homes in Mission at 1.4. In fact, most of my clients, we're going to see the 5-year trend a little bit later on in these stats, but most of my clients have owned in Abbotsford for ages. So they're doing quite okay. However, it doesn't really make you feel good when you see these types of numbers. Mission right next door. Let's pop in. Now, this is the argument I have. This is where you cannot use average price, and I will fight people on average price forever and ever and ever. Benchmark price in Mission is now 906. A year ago, it was 1.1, representing an 18% decrease. The benchmark price came down 3.7% just this last month. That's a heavy decrease for a 1-month period. Then the average price was 935, coming down from almost 1.2, representing a 20% decrease, 21.6% decrease. However, last month, the average price was 854. So that means the market in 1 month just went up 10%. Now, do I think that the market went up 10% last month? No, but the people that use the average price as their number one indicator, well, you just missed the market bottom in the previous month. But personally, I see 3.7% being the actual likely decline if you were selling the exact same house. So what this means is when you look at, say, November being at 854, a lot more of the lower end homes sold that month than they did in December when the number was 935. So again, this benchmark price is likely a much better indicator. Let's quickly move down through the other areas here. South Surrey, White Rock, doing very much the same thing. Average price actually increasing. However, the overall market is still dropping. The detached home prices in White Rock are not dropping nearly as fast as they were in the Valley, and you will find that with higher asset classes. This is going to be the trend. Moving into Langley, we're seeing again minus 16%. And then look at this, another 10% increase in prices over the previous month. Do I think that's representative of Langley, of the properties that I'm selling? No, I don't. I think that this benchmark price is a much better indicator. North Delta, look at the big swing, minus 9% month over month, minus 22% year over year. These numbers, I do find them much more accurate. These big swings, again, why we shouldn't use average price. And then let's get into the city of Surrey. Now, this is this overall city of Surrey combined, excluding White Rock itself. And it's down 14% in average price, benchmark only 8.5%. And again, if you're going to use the average detached price as being your benchmark, not benchmark price, but you get what I'm saying. If average price is your indicator, the market in detached homes has bottomed out in most places in the Fraser Valley market. Look at this right here. We've got Surrey Central, the exact same thing. Prices going back up. However, let's face it, guys, prices are not going back up. So I'm going to continue to use that benchmark price number. Cloverdale, average price down, benchmark down as well. So you're seeing all of these trends. Here's another one. North Surrey up, average price 9.3%, but the benchmark price still down 4.5. Now let's pop into the 5-year trend, and here's a very interesting number. So we have the number of real estate agents, members on the board is almost cresting 5,000 at this point. A year ago, it was 4,400. The year before that, 3,600. 2 years before, the 5-year trend was 3,500 agents. So we've added 1,500 agents, and now we're removing 40% of the sales off of the peak. That means a whole lot of agents are going to go without paychecks on a monthly basis. But look at this number here. This says that we were down 40% or whatever in sales, only 15,000 sales. Almost identical to the number in 2019 when, well, the market was not good in 2019. People don't remember how bad the market was and that prices were going down in 2019. We were in a very similar market at that point. And just 2 years previous to that, we were all the way back up at 22,000 sales in that year. So I wouldn't say it's a bad year if we maintain that 15,000-ish sales over the total period of the year. However, if we do drop down into what's very possible 12 or 13,000 sales, there's going to be a whole lot of starving real estate agents out there. And if that happens, I would assume prices will be coming down very quickly, and hopefully inventory does rise. But let's get into the 5-year trend on detached here really quickly. The amount of sales in 2022 was half of last year. Crazy. The detached house market is cut in half. And that's actually what I'm seeing in my own business as well. I'm listing and selling way more condos because those are affordable and the detached properties are not. There's also a lot of teardowns happening. Let's face that. So a lot of redevelopment. So generally speaking, last year was insane for detached. 2019, I mean, we're not that far off, 5,000 compared to 5,700. And 2017, a much higher number. But now let's get into the overall year. So the average home, now this is different than the year over year numbers that we looked at. The average home in 2022 that was detached sold for 1.65. That's still up 14%. So if you can understand that, that is not a moment in time. That is, you take all of the sales that happened in that year and then what was the average price of those. So technically we are still up in average price if you look at the amount of homes that were sold for the amount of money. Moving back to 2019, so this is pre-pandemic, the numbers are still up 63%. The average home is still selling for 63% more in 2022 than it did in 2019. And let's be honest, the majority of those were, again, in the bulk at the beginning of 2022. And then if we go back 5 years, we are up another few percent from there. But I like to see price growth from 2017 to 2019 like that. Let's say 987 up to just over $1 million. This insanity of the next couple of years to go 2 years later, up $400,000 and then another $200,000 to me, well, it's just not healthy. And well, obviously the market found that out the hard way. So you can, again, peruse these yourself. I'm going to pop down. This is a Surrey Real Estate channel. So I want to pop down into Surrey to look at these numbers. I'm just going to focus here on the overall city of Surrey combined. Yes, the average home over the last year sold for 1.829 detached. This is in the city of Surrey. That was under 1.6 in the previous year. And then look at these pre-pandemic numbers. Like 1.1. This is obviously not healthy. There is room for prices to come down quite a bit. And I would suspect that the number for 2023 very well could be very realistically under what it was for 2021. So again, you can come back and take a look at these numbers if you like. I always love, though, in the stats package to come right down to the bottom and look at this. Oh, here's an interesting chart, just so everybody knows. This is whether or not you are a balanced market, a seller's market, a buyer's market. This is something I report on as well on the Surrey report every single month. But look at this consumption rate of basically 100% overall. That is why prices spiked as they did. People were buying properties as fast as they could come on the market. You could buy anything. And 2008, there's an indication of a very bad financial crisis for you. Then 2012, 2013, these were all buyer markets overall. And currently in the Fraser Valley, we are actually sitting in an overall balanced market. That being said, obviously interest rates are affecting the actual prices. So the amount of inventory is down, the amount of sales are down, prices are down because borrowing rates are up quite a bit. However, one of the last two that I like to come to every single month is the overall HPI charted on a graph. You can see what the overall market is doing. When I've done videos on this in the past on the channel as well, when we see prices either go up or then come back down, we often do it and we can intersect the peak to the timeline front and back, and we can usually find out that they're going to go up just as fast when they come down. They do it at the exact same pace. The question is, when does the bottom happen? You could intersect any one of these curves and find out that, well, they are usually coming down at the same rate as they went up. They just never usually come down as far as one of the previous peaks. But generally speaking, when I look back almost every single one of the graphs seems to be midway through 2021, or let's say end of 2021. So let's face it, guys, 2022 is going to be a lost year of real estate growth, and you're not going to see that money back for some period of time. And then this is the most shocking one. I'm going to warn you on this right now. This is the average price graph since 1979. And that dagger right there is sure not looking good for a lot of people that have bought in that area. It doesn't look good when you compare it to when house prices were $72,000 back in 1979. However, if I'm going to shed some light on it and a little bright spot, which realtors always have to do, you're going to notice here that, again, average price has ticked back for at least a month. Do I think that's going to keep up? I don't. But if you are that person that likes to use that average price indicator, well, apparently the market's just bottomed. So again, lots of debate down in the comments. I'm sure there's going to be people saying another 50% off, and then there's going to be other people saying this is the bottom, let's go. I personally think we're into a downward slide for the next, let's call it 12 to 18 months, and then off to probably a regular recovery. Hopefully we go sideways for 4 or 5 years. And then inevitably in Canadian real estate, usually we will have a recovery, and it may be 4, 5, 6, 7 years down the road. But unless we have seen the end of an era, prices will continue to rise over time. Please remember to subscribe, click the like button, and we'll see you in a couple of days.